Hi everyone, my name is Ntombela BP from Majuba College. We're continuing with our departmental account whereby we'll be looking the departmental income statement. We'll be doing a June 2016 paper where it requires us to prepare departmental income statement for electronic enterprise. The information also given here from this paper: electronic enterprise trade in cell phones and computers. These are the two departments this business has. And all good we mark up at 50% on cost, and the business operates by using the periodic inventory system. That is very important to note. Another information that has been given is general information whereby the department for cell phone has 8 workers, whereas for department for computers has 12. The floor space that was using by cell phones department was 40 square meter, and for computer was 60 square meter. They gave us this pre-adjustment or totals which were extracted at the end of the financial year. It shows 2 departments, cell phone department and the computer department. Just check where all amount belongs, especially where there is purchase returns. You don't have the returns here. We got salaries, of which is 880. Rent expense is 118,000 in advertisement. These 3 are accounts. They are not separated. We're not sure which falls for under cell phone department and which falls under computer department. That gives a clue that you need more information to calculate salaries for cell phone department and salaries for computer department. Same thing applies. The rent paid for these 2 departments, which means we need to calculate them. Advertising, again, we need to calculate for what percentage goes to which department. The additional information: the costs are allocated as follows. Salaries, like they've been given here as above. The salary is 880,000. Now, on this additional information, they are telling us how these salaries are being paid per department. They are saying salaries are paid per number of workers per department, and rent expenses as per floor space, and 75% of advertising was portioned for computer department. Now, I did this calculation already for you to know, because you're gonna need it, this calculation. For cell phone department and the computer department, the salaries for both departments sums to 880,000. There is 880,000. You take this amount. They are saying, according to additional information, salaries are paid per number of workers. If you go to the general information that we gave us on top, they said for cell phone department we have 8 workers, and computers we have 12. Now for us to calculate this one, you're gonna say 8 plus 12, that gives you 20. Then you take that 8 over 20, you multiply with 880,000. Then you get the amount there, which is, you say 880,000 times 8/20. That gives you 352,000 rand. Then you know when it comes there how much you need to put for salaries for cell phone department. For computer department, again, you do the same. Take 880,000, the lump sum of amount. You multiply it by 12/20. Sum of the two divided by 20. Then you get 528,000. For rent, you do the same again. For rent expense, you go to the additional information. They're saying here, rent expense is paid per floor space. According to our additional information, they told us here that 40 square meter is for cell phone and 60 square meter is for computer. Then when you add 40 and 60, you get 100. You're gonna say 40/100 times the amount for the rent expense, the total amount of rent, of which is 118,000. 118,000 times 40/100, that gives you 47,200. Then for a computer, you do the same, say 118,000 times 60 divided by 100. You get 70,800. When it comes to advertising, there is a guide here. 70% for advertising goes to computer department. How much was there for advertising? It was 90,000. You're gonna say 90,000 times 75%. 90,000 times 75%, of which is 67,500. Then 90,000 times 25%, it gives you 22,500. At least this calculation you got, then you know when you work on your departmental income statement this 2 months, then you'll be able to separate which money belongs to cell phone department and which amount belongs to computer department. Then let us go now to our core matter of the question. In this case, when you write the departmental income statement, you start with sales, cost of sales, then you add other income, like the format of the income statement is what we're using here. The difference in this case is where, because we have two departments, that's the difference, but the more of the things are the same. Our sales, we start with the sales. When you go to the given information, you're given the sales. The sales is 670,000 for cell phone. Then before you write this one, you need to check any sales returns. You're gonna say 670,000 minus sales returns, of which is 12,200. That gives you this balance of 657,800 for cell phone. Same thing applies for computer department. You are having 829,000. You check the returns, sales returns is 9,000. You're gonna say 829,000 minus 9,000. That's why we're having 820,000. That is the sales. We are done with the sales. Then you come to cost of sales. This amount, I'll show how we calculate it. For this one, we say less cost of sales. We start with the opening stock. This is the opening stock. Opening stock, you take it as is here. 325,000 and 370,000. You take them as is. There is it here. You put them as is. Then you come to your purchases account. Your purchases account is the one that you work. Remember, the time we were doing the departmental purchases account, you apply that principle. You start with the balances. You start with the balances for purchases, of which is 320,000 and 160,000. Then purchases returns. There's purchases returns on the computer department, which means it's a minus 12,500. There's no purchases returned under cell phone. Then you go to additional information. This is your return. Then on this one, you got a transfer. It says on the 28th of February 2015, Samsung laptop was transferred to the cell phone, which is there's the amount sum of 9,700, which was transferred to the cell phone department. Then, which means you remember what I said on your first slide, on part one. I said when you transfer, you do a double entry, do a transaction in both departments, because you have to minus from one department and add to another department. In this case, this laptop, it was equipment, a computer, was transferred to cell phone, which means under cell phone it's going to be a plus 9,700. Then under computer department, it's going to be minus 9,700. Remember that. Then number 3 talks about the delivery of 10 computers that was sold now. Number 4 talks about the written off. No. Number 5 talks about the bonuses. Number 6 talks about the depreciation. Okay, that is all for. Then you calculate. You start by saying take the balance, the totals for 320,000 for purchases. You add 9,700. The new balance for cell phone department is 329,700. You add that 9,700 to the balance of 320. For cell phone, for computer department, it's going to be 160,000 minus 9,700, the amount that was transferred, minus the returns. You'll be left with 137,800 is how these two amounts come. Then we move to carriage on purchases. Again, before you write carriage on purchases, you need to check with your additional information if there's anything that was purchased and we didn't pay the delivery fee. According to this exercise, we have only carriage on sold, not on purchases, which means this carriage on purchases 18,000 and 9,000, they come as is 18,000 and 9,000. Okay. Once we are done with this first part, you add the opening stock, the purchases amount, and the carriage on sales on purchases. We don't have the import duties here and other stuff. Then there's no need for you to add it. You can add all. When you add all those amounts, you are getting this amount, 668,200. And less closing stock. This is a closing stock of 80,500. Where you got this closing stock? They are given already here. Is it here? On the information that was extracted, you were given those totals, 80,000 and 192,500. You just put them as is here. Then you're gonna say this total minus a closing stock. When you minus this one, we are getting 587,700. Same thing applies this side. When you minus 516,000, 800 minus 192,500. We are getting 324,300. This is your cost of sale. For you to get a gross, you need to say sales less cost of sales. Is how this 70,000 is coming from. Then the same thing applies this side. This side. We are saying 820,000 minus 324,300 is where you is how you get this 495,700. This one previously we call it a departmental statement. If you just give the departmental statement, you end here on the cross. But because we are doing departmental income statement, you go further, you put whereby you're gonna have add other income. This is very important to take notes. Then you're gonna go to your given information and check anything that is you can add it to other income. Yes, there is discount received. Discount received was 21,500 and 2,800. Those amount they comes here. You add the 70,100 with 21,500 to get this amount of 91,600. Same thing applies on the computer department. Then you get a gross income. Then you come to less operational expenses. Under expenses, you come here, you start with carriage on sales. Here you are having carriage on sales. This is one of the expenses. You are having 16,600 and 25,000. For you, before you write, you go to your additional notes. Remember, it was number 3, if I'm not mistaken. Yes, number 3, which was talking about the amount that was owed to a courier company. There was the amount of 5,870, which was owed to the company. This amount of 5,770 was owed, which means we didn't pay this amount. We're still owing these people. It was derivative of 10 computers, which means under computers, carriage on sales, 25,000. We didn't pay that amount. We need to add that amount. We're gonna say plus 25,000. We add with this amount that we're still owing that we didn't pay. That's why we're having 30,870. There's nothing that they said about carriage on sales under expense cell phone department. Then another account that we're having started here, we're having sundry expenses. Sundry expenses, we're having 18,000 and 14,000. Nothing has been said about that. 18,000, 4,000, you put as it is. Then you come to another account, salaries, rent, and advertising. This one you already calculated. Remember, we just started with there is it here for cell phone department and computer department. You also to put them correctly. For cell phone salaries, for cell phone is 352,000. There is it here. And for computer is 528,000. Just copy this amount because you calculated them already. You put them accordingly. For your rent expense, already you got it. Your rent expense cell phone is 47,200 and the computer is 70,800. Again, you just put as it is. For advertising, you know that was 75% was for computer, 67,500 was for computer, and 22,000 was for cell phone. Again, you put them as is. Because we are done here. Once we are done with the given information, you go to additional information to check whether you exhaust all your transaction. Number one, we already done. Number two, the transfer we did it. Number three is for carriage on sales, we did it. Number four, it talks about the bad debts, amount that need to be written off. There's a outstanding amount that need to be written off of 1,300 under cell phone department. That is a bad debts, which means we have to go and write bad debts under cell phone department amount of 1,300. Then you go again to your notes to check whether everything is done. Then you find out number four talks about the bonuses. The bonuses are as follows. For cell phone is 12,500. That one is simple. Bonus is 12,500. There is it here. Then for computer, they say this one you need to calculate. Bonuses for 1% of this department net sales. You remember the net sales for computer. We have days net sales net. Why they're saying net? Because it's after you subtract the sales returns. It's 820,000 times 1%. There is how this amount is coming from 8,200. This is 1% of 820,000. Then you come to the last one is depreciation. Depreciation must be calculated at 20% on a straight line method on equipment. On equipment. Then you go to it, given information, you check the equipment. There is equipment we are given. There is a 360,000 for cell phone times the what percentage is that here at 20%, which is 72,000 rand. That is how it comes from. Same thing applies. Then 220,000 times 20%, you'll get 44,000. Then for you to calculate all this amount, you need to calculate all these expenses. When you add all the expenses, you add them up here. All these expenses 16, 18, 352, 47, 22, 1,200, 12,000, 72,000. When you add them all, you get this amount 542,100. Then this amount you subtract, you say gross income minus the expenses is how you get this 450,000, of which is a net loss. In both departments, unfortunately, there is a loss. Is how you go about the departmental income statement for this exercise. I thank you. I wish all the best in your work.